$16.8 billion. Yeah, you heard that right. On August 6, 2026, the state of Texas just dropped an absolute bombshell with that number, announcing that SpaceX is constructing its vertically integrated Terafab semiconductor manufacturing facility right in Grimes County. We're talking about one of the largest industrial investments ever announced for the Brazos Valley, backed by a $30 million Texas Enterprise Fund grant and qualifying under the state's JEADI Economic Development Program.
And right alongside that massive capital injection comes another crazy number, 3,000. That is the sheer scale of the new jobs this first phase alone is going to create. I mean, think about it. When you drop 3,000 advanced manufacturing jobs into a market, you aren't just building a factory, right? You are instantly triggering a massive high-stakes real estate boom. And honestly, that's exactly where the opportunity lies for us.
So let's dive right into this. Welcome to this explainer on the Terafab effect. Today, we're going to completely dismantle the amateur myths surrounding this massive announcement, and we're going to reveal the sophisticated, data-driven playbook for investing in the Grimes County and greater Brazos Valley area. The question isn't whether Grimes County is going to change, it's exactly where that growth will create sustainable, long-term opportunity. Let's get into it.
All right, Section 1, the proximity trap. Why mileage is a myth.
You know, whenever a huge corporate announcement like this hits, it just instantly triggers this wild gold rush mentality. Eager buyers fall straight into a massive conceptual trap. Usually sounds a little bit like this. Well, SpaceX is coming, so, anything nearby is a good investment. They grab a map, draw a 5-mile circle around the facility, and literally buy whatever dirt they can find, right?
But here's the reality. It isn't. Full stop. I absolutely cannot emphasize this enough. Buying random acreage simply because it sits close to a factory, unless you're planning on pitching a tent on the property line, is one of the most dangerous mistakes an investor can make during this kind of boom.
There is a massive difference between how amateurs and professionals evaluate an area. The amateur focus relies entirely on lazy metrics like distance, mileage, and drawing those simple radius maps we just talked about. But the sophisticated focus, it looks at practical access. A tract of land sitting right in the future direction of growth is extremely valuable, but a tract surrounded by infrastructure limitations, say poor drainage, no realistic wastewater options, zero road capacity, well, that's going to remain incredibly difficult to develop, even if you can literally see the Terafab facility from your property line.
Moving on to Section 2, Infrastructure and Hidden Costs, the real price of development.
So, that brings us to the hidden realities. Amateurs often get super tripped up by the legal jargon here. Specifically, they confuse a Chapter 312 reinvestment zone with a Chapter 311 TIRZ. And guys, making that mistake is a critical error. In simple terms, a Chapter 312 simply gives the factory a tax break, whereas a TIRZ actually captures future tax revenue to help pay for community infrastructure. They are completely different animals. Understanding that distinction is absolutely key to grasping how the surrounding area will actually get funded.
Because that primary Terafab facility has its own specific abatement arrangement, the future development surrounding it, the subdivisions, the commercial centers, they are inevitably going to rely on completely separate financing structures. We're talking about municipal utility districts, public improvement districts, developer reimbursement agreements, and public bonds. Now, these structures are amazing because they make massive development possible in the first place, but they also heavily impact the carrying costs. And by that I mean the actual monthly bill for the end user homeowner.
So here is the absolute crucial point. Stop asking the basic question, what are the taxes? It just isn't enough anymore. If you're an investor evaluating future subdivisions, you need to use a much more advanced question to uncover the truth. You need to ask, what is the full tax rate? What district debt actually exists? What assessments apply? And what infrastructure is the homeowner ultimately paying for? The answers to those questions are exactly what will determine the long-term affordability and viability of any new housing development.
Okay, Section 3, Strategic Housing and Land, Mapping the Spillover. Think about this. How do we actually house a 3,000-job facility? It requires an entire ecosystem of contractors, logistics, engineering firms, restaurants, healthcare, the whole shebang. Let's break down how this spillover categorizes into distinct roles for the surrounding communities. Over in Navasota, you've got an established city structure with immediate access to services. That's perfect for contractors and businesses needing quick deployment. Then you have Anderson and Central Grimes County. That area is going to attract buyers and renters who want proximity but still want to keep a rural environment. And then there's Bryan College Station. Yeah, it's further away, but it offers highly established housing, top-tier healthcare, retail, and schools. The strongest rental investment balances commute, quality of life, and existing infrastructure. It is rarely just the cheapest property closest to the front gate.
And listen, this is a golden rule for this entire explainer. Burn this into your mind right now. Your investment must survive on its own merits. What if Terafab's construction schedule gets delayed? What if housing supply increases way faster than expected? What if a massive chunk of that highly skilled workforce decides they'd actually rather commute from Bryan College Station for the better schools? The underlying investment has to make sense today. Terafab is the icing on the cake, it's the upside. It absolutely cannot be your entire investment thesis.
Let's pivot to Section 4, Navigating Opportunity Zones, the tax incentive nuance.
Now, let's add some high-level strategy to the mix. Grimes County already contains federally designated opportunity zones. But what makes the timing of this absolutely fascinating is that Texas is simultaneously finalizing its Opportunity Zone 2.0 designations by August 17, 2026. Texas is outlining a massive 30% basis step-up after 5 years for certain qualifying rural funds, completely alongside reduced substantial improvement requirements. Honestly, that is a literal game-changer for sophisticated capital looking at Grimes County.
But we always have to come back to our core philosophy. Tax advantages cannot magically fix a terrible location, bad underwriting, or a complete lack of real market demand. An opportunity zone is a brilliant tax structure that you layer onto an already fundamentally sound investment. It is never a justification for buying a bad property just to save on taxes. Think of it this way. If the deal doesn't work without the tax break, it doesn't work with it either. A tax break on a terrible property just makes you a slightly less taxed loser, for sure.
And finally, Section 5, What Investors Should Watch, the Real Signals.
So, as we look out to the horizon, just ignore the flashy press releases for a second. This right here is your real checklist. Watch subdivision plats, watch utility expansions, watch county road projects, watch TISDOT planning, watch those land assemblies, and definitely watch commercial permits. These are the true, undeniable signals of where the homebuilders are actually acquiring acreage, long before a single house ever goes up.
Which leaves us with this final, provocative thought to chew on. The Terafab project is undeniably going to reshape this part of Texas. It is an absolute economic juggernaut. But as we've seen today, the true opportunity doesn't lie in just buying the dirt closest to the factory. It lies in understanding infrastructure, utilities, tax frameworks, and human behavior. So step away from the amateur radius maps, roll up your sleeves, and really look at the data. Ask yourself, are you just chasing the flashy headlines, or are you strategically positioning yourself for Texas's very next growth corridor? Thanks so much for joining me on this explainer, and I will see you next time.